piling in, and they're putting stops below the children and not below the parents.
So can we just ask like the guys? Like I don't know whether I've got the real chat going here. It seems I'd expect more interaction, but if I'll ask this just to find out if I'm in the right place. So does everyone get that? Does everyone? So this is the entire point of, aside from his a lovely fella, this is the entire point of this collaboration. Understanding where the depth of a stop hunt could go to by looking to the left and seeing where these proper areas of demand are, so that we can get in. If I can just if you can just give me back control, mate.
Yes, of course. Okay, you still can, I think. You can stay. You should still be able to move the
Oh,
mouse.
can I? Okay,
Maybe. Yeah, you got it.
sure.
Yep.
Right. Can I draw? I don't know. I can't remember how I did it a minute ago.
If you go,
Just a pen, a piece.
if you let me go. Let me grab it quick and go up here. Uh, Annotation, drawing. Yeah. Okay, go on then.
Thanks, mate. Cool. Okay. Oh no, can't do it. Do you want to follow me with the mouse?
Try
So
now.
there's your stop hunt level. See that?
I think you grab the mouse now. I think you can do it.
Ah, sorry, I've got a click.
Ah.
Who knew? Right. So you've got the level of how I would describe a potential area to be stop hunted, and simple can be that people are taught to buy basically double, triple, quadruple bombs, tops, etc. Right? And there's a great Sun Tzu quote about lulling people into expected patterns and then striking when they least expect it. It's literally how the basis of a stop hunt. People then pull the trigger, go long because they've been lulled into that behavioural rhythm. They put the stops below this area. Meanwhile, off to the left, we've got this major area that we're going to go into, and it's in here. I always profess, because I'm lazy in terms of getting super accurate, because I always like the psychology of me trying to get in on this side.
Mm.
But when you can understand that you can get in, or there's a if it's for you, you can get in at a cheaper price actually inside the stop hunt with this parent-child relationship up your back. uh, Obviously that's going to massively improve everyone's game. So does everyone understand what you're saying there?
Yeah.
So let's have a look.
There's actually another beautiful example at the top, Mark. If I just grab the mouse,
Yeah, go for it, man.
we have the same thing going on here, where where we have a parent here, the parent, the child. The price comes just to the child. You can see maybe people kind of got into this one here, and then price went deeper into the parent, and then it left. And you can see the highs right here. That's the high of the child, and this is
Yeah.
the high of the parent. And so this push here is essentially the same thing. It's priced like gunning the stops and then going in the other direction. Um, yeah, that's very interesting actually, because I think that the magic is the actual like incredible overlap of this parent-child relationship with the stop hunts. I mean, I've never looked at it from a stop hunt perspective until I watched your material, Mark, and now it makes perfect sense. Yeah, because they marry
and
some
and,
of
and,
the.
tho- and those highs, obviously we're on the weekly, don't go down, but like if you're on a daily, if you're on a 4 hour, you're going to have a beautiful version of a very precise level, and then it goes deep. Well, it drops first, draws people in, then goes deeper, and then smashes them. um yeah.
Hmm.
Yeah, super cool. So we've got a few questions coming in. Let's have a look. uh, Kevin saying, I think this is on the lower example. Obviously, Mark, I thought the parent would be a little lower. Could you explain that on that buy trade at the bottom there?
This one here.
Yeah. So you're saying why isn't the parent a little lower or something?
It's because this here is a continuation pattern, how a price came down and it moved up sideways and then went higher. So this is a continuation pattern. So you have, I mean, you have demand that's formed like this, where you have kind of turns around, and you also have how you have like price rallies, moves sideways and then moves higher. And you have the opposite for supply, where it goes up and then down, or down, sideways, and then down. And this here, this is this one here, and this one here, and this one here are this kind here. And we have another one here, which is this one here. So this is just a continuation pattern. And the reason this is interesting is because in this area here, there was supply, and I can see that because price poked into that and it moved down below this low. So that tells me there's a lot of selling here. And this one, price rallied to the area, right, it stopped, it closed right at the highs, we accumulated, and then we moved above these highs, taking out this supply. And so, I mean, I didn't say that out loud, but that's the thought process. You essentially, you want to find the area of supply and demand that is strong enough to consume opposing supply and demand. And this one here, which is a continuation pattern, moved above the high of this area of supply here.
Yeah, and you've got to think of it in the context of, so for Kevin's question, where I've drawn 1, 2, 3, you've got to think of what that's doing as well before it dips into that. So the likelihood of that then becoming the actual area is higher because of what you've got context-wise off to the right.
Yeah, that's right, exactly.
We've got some. Sorry, someone had come in late. Brian, how are you doing, Brian? Could you kindly explain what child and parent supply and demand is?
Yeah, definitely. I'll let me clear this all off, and I'll start from the beginning. Okay. Okay. So, the reason I use the terms parents and children is just to underline the fact that there's a relationship. So if an area is noted as a child, then you know, okay, then there must be a parent, because all children have parents. Okay, and so if you look at um, let's look at this little mess in here, because this is something that a lot of people would probably kind of look past. Okay, so let's zoom really closely and have a look. So we have this one here where price moved down, and then actually that's not a very clear one. Let's find, okay, here we have, right here, how you have prices form this high, it came down, there's no supply here. We have to find somewhere we have some supply. Okay, here, this is a good one, where we have some accumulation. This candle closed above the high of the accumulation, price came down to it, we rallied, we moved sideways, we rallied. Here we have a parent and a child relationship, where we have the parent down here. I'm just going to delete all these so we have clear drawing. The parent is here, and the parent is from the low, the slingshot, to here. And it's here because we have these two candles, their accumulation. This one closed above that. That tells us we have strength, and the strength originated from this area here. Now this one came down and reacted to that one, and then price went up. There's no close above it, but we do have price move sideways, and this is a micro child, because you can't see the clarity on this time frame, but price came down to this one here, we accumulated, and then we left. And so this you would refer to as a child, and this would be another child, and this would be the parent, because these two are reactions to demand and not actual demand, and the demand that they reacted to is this one just below price here. And so note that,
and then you've got the stop one, right?
Yeah, exactly. So, and I bet you
How cool is that?
and I bet you that we have, I mean, see how we have a deep wick here and a deep wick here. There's going to be some children in this wick here, and price went to the first child here, and then it went deeper, so past this one here, and it went probably deeper into this one here. And here we actually have the buy zone, which is the low of this one here. This is where price came to, and you can't see it on this time frame, but you could see this on perhaps the daily or the 4-hour chart. You could see the clarity kind of jump out at you here. And so
To the pip.
sorry, mate.
To the pip.
Yeah. It's often like that. And so essentially, where you have price kind of move down, move sideways, it rallies, it comes down, the slingshots pull back, we accumulate, and then we move off like that. This is a parent, sorry, this is a child, and this is the parent. And so
So
I wouldn't trade these, I would trade the deepest retracement that the
back
child
into
was able
that, yeah,
to move
that's
into.
sick. Does everyone get how sick that is? Brian, do you want to just let us know if that was clear, mate, and if we answered your question? That's ridiculous.
It's pretty cool, isn't it? And it's not that complicated. It's just like just looking at these pullbacks, these pin bars that kind of move deeper. That's just like when you have like a pin bar that moves deep like that. It's just begging for you to pop down on the small time frame and look for that slingshot because they're always there. Always, 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 always they'll be there. And if you don't see it, if you're on the weekly chart and it's begging for a daily, go to the daily. If you don't see it on the daily, go to the 4 hour. And if you don't see it on the 4 hour, go to the hour or the half an hour. And we've done examples where we've seen a weekly area of supply or demand, and we've gone down and we've pinpointed the entry on the 1 minute chart because they're there. It's I mean it's absolutely it's incredible how accurate it is. It's absolutely incredible how accurate it is.
Super cool. Got some more questions.
Yeah.
Andy's asking, where would the stop? Where would the target be on the stop hunt from the lows in gold? I'll answer that. Andy, just hold,
Hey.
hold until the virus buggers off. Oh, and then we're going to have a recession.
Hi Andy, I can see you there.
No, we can do. We can do that. I'm just messing.
Okay, so I mean, where would a target be? You mean like
So can I just talk about that as for a moment as well?
it? Yeah, of course.
So targets are. Do you want to give me the screen again, mate, and
Of
just tell me
course.
when to click? If you put me into that gold trade a little closer, and then
Is that better there?
yeah,
Okay, let me. Do you want? I'll give you the pencil. There it is. You got it. It's all yours.
got it.
Yeah,
Okay, cool. So this was it, wasn't it? Yeah.
that's the one.
Right. So Sari can talk to you about what's in here in terms of accuracy to come out of positions, or maybe it's somewhere in here as well. Bear in mind this is the weekly chart, but there's a way of getting involved to make sure you're involved in some of these bigger trades by leaving a PC position open and trailing using stop hunts rather than so. First of all, trailing stops is bullshit, and I hope you all know that in terms of the automatic version of it that you're given by the broker, because it's an arbitrary number and the market doesn't give a fuck. So, and this is important as well. When we're on at the hard right edge, so we're looking to take a trade. We take the trade, and now we're at the hard right edge, and this is where it all goes terribly wrong because this is I talk about the 4 P's of process: P1, P2, P3. I'm going to focus on P3 in particular because it's the most insidious of them all, and it stops everybody from becoming or having the ability to become consistent. So P2 is the mechanics of taking the trade. So this is everything to the right of the chart. So this is your position size management. This is where your stop loss is. This is did you execute on your entry okay? That's the mechanics of it, right? So you pull the trigger, you take the trade. Did you do well? We all make mistakes from time to time. We might be slightly off on our entries and things like that. But hopefully our risk is in place and we take a good trade. P3 is what is the biggest disaster of them all. And this is why traders don't get consistent, or they have absolutely no chance of becoming consistent because it comes in, it bites you on the arse, and then it buggers off again. And you never learn to interact with it in any reasonable way. If you're going to learn to do something, you've got to be exposed to it. And you're not exposed to it because when you're in here, you start panicking and freaking out about P&L. A lot of times people are over levered, etc., etc. So what happens when you're in this trade is, from a trailing stop perspective, is you lose in all objectivity, we're in fight or flight at this point. We're not thinking straight, and we're not understanding that we're going to have pullbacks. So let's assume we are just focusing purely on the immediacy of that move up at the hard right edge, and we're looking at the P&L, and we're freaking out like, I'm making money, I'm making money. You feel good, right? So you stick a trailing stop, an arbitrary trailing stop up the arse of the trade. The trade doesn't give a fuck about that, doesn't care. But you've just choked off the potential for the trade, right?
Mm.
So you've got to have another plan. So this will include, so there's two things to this. This will include being able to be super accurate with what Sarid's talking about, and also having the ability to get involved in something like this. Because without something like this, you're really curtailing the potential. But how do you do it? And is it just the next swing if you follow and trail manually? Trailing's amazing, but you got to do it manually. I wouldn't say it's the first swing, because at some point, first swings will be violated and stop hunted. We'll go deeper. um, if only Elliott Wave was this perfect overlay that you could put onto a
Yeah.
chart, right? We all know that not to be true. So how about this? Sarid will help us understand where we can take pieces of the trade-off, but leave some of the trade on to trail only stop hunts as they unfold. So you don't even have to try and care whereabouts you should be taking off this trade, because the market is going to tell you. So you just obviously leave that trade open and you let it, and that allows you to let it run, because you're going to then trail behind the stop hunt as opposed to some arbitrary swing. So I
Yeah.
hope that helps. So over to you, mate, and you can be a bit more accurate in taking some of the position.
Yeah. Well, I think getting out of trades is an art, and I'm still trying my guts out to get good at it. And I think my problem is psychology of it. Um, Technically, I can see what I have to do, but emotionally, a lot of times I find myself doing something else. But the cool thing is that you get out of, let's say you got someone bought down here. Okay, so price kind of poked into the parent. We went a little bit deeper, and we're kind of moving north. Where would you get out? And then you ask yourself the question, well, where would you like to sell? Where's a really attractive place to sell? Okay, and you can see we have a really strong release here, and we have a strong release here. So that means that we want to be looking at this for an entry to sell at, and your target would be closer to your entry. So, because maybe price is not going to get all the way up to here, for example, and so you get out of the trades the same way that you get into trades, and so that's, and the cool thing about that is that you really learn to perfect your X's as well, because you're analyzing the chart the exact same way for your exits as you are for your entries. And so you're applying the exact same theory. So you would ask yourself, okay, let's say we're long here. When do we get out of this? Well, fundamentally, which is also a huge part of it, probably bigger than anything else. If I got in here, I wouldn't get out of it anytime soon. So fundamentally, you'd want to hold it. But technically, or as Mark says, maybe if you want to take a bit of the profit out, then you want to ask yourself the question, where would I look to sell gold? And we mentioned I would like to start to sell gold here. We started to sell a little bit of gold here, but this is shorter term because we know that fundamentally, I mean, gold is pretty bullish, and so it's pretty simple. I really like to get out of the trades the same way as get in. The main problem is having the nerves and the head to keep you in the trades for that long. And I think a few people are capable of doing that. But yeah, that's where.
Can I just interact
Yeah,
there
go
as
on,
well,
go on.
please? Can you clean that chat up for me as well, mate?
And I can just do here clear all drawings. You want to draw again?
Yes, please.
All right, go on.
Cool, thank you. So if we took that example there, and in particular, and we asked Sarid if this looks like an area of supply, And obviously, this is a weekly, right? So it's fractal. So don't freak out. You might not be able to stay in it that long, right? But um, the way that you've got an opportunity to try and do it is if we're taking off part of the position, let's say 2/3 of the position at these accurate levels, then you've scratched the itch, and then you've got the ability to just trail what the stop hunts that present themselves. So it's a perfect solution to be able to hold. Now, where's the downside? The downside is the mindset of that, the psychology of that. The actual best thing we should all do probably is just hold and trail stop hunts. But that's super difficult because you're gonna be in a position where you went up, 500 pips and you came all the way back down to break even. That's beyond brutal on your psychology. If you can do that, you're a killer. And the way that you can get to that psychology and being able to not care as much about the trade, I'm not saying you're never going to ultimately care about the trade, but you've got to realize that it's just a trade, and it's one in thousands of trades you're going to take, providing number one, your risk is in good shape. If you are feeling too much pressure when you're taking a trade, it's an indication you've got too much risk on the table. So the best advice I can give you, none of this 2% nonsense that's bandied about everywhere, as a trading truism, it's a terrible idea. Get down to point 0.1, point 0.2 of your account. Now you go, oh well, Mark, how am I ever going to get anywhere with that? The point is, you're not supposed to get anywhere with that. What you're supposed to do is interact with P3 effectively for the first time. Give it a cuddle, love it, understand it, feel it, because these things are very, very obvious. When price goes up so talk to me about how you feel when you first take the trade, right? There's a degree of confidence, there's a degree of like, I guess, a little bit of trepidation. It starts going your way. It screams north. Like it couldn't go any better if you tried. By the way, there's different versions of that. It can be more steep than that. It can be more shallow. The angle, the way, the time in which it gets to where it gets to differs. So there's grayscale. Your experience of that positivity is expressed differently because the chart is dragging you into these emotions, right? So there's grayscale. Okay, cool. Well, guess what? That's pulling back. Price doesn't continue all the way. And especially when we're talking about perhaps trailing something, it's just not happening. So you're going to have to release yourself from the fact that price starts to come down. Well, what's that? Oh, fuck. Retracement, reversal. I don't know. I haven't got a clue. There's grayscale to this. Is it one of those scary dojis? Is it an engulfing candle, evening star? You know what I mean? Like, you start to panic, start to feel negative. By the way, how can that come down? It can come down a slow grind. It can come down quick. Those candles can be big. It can be fast, right? Aggressive. There's grayscale to aggressive, right? I'm just, you know what I mean? I'm trying to get you to understand. And you have to understand that the more aggressive these versions of movement are, the worse you're going to feel about it. But here's the cool thing. If you can revert back to the idea that trading is about long-term gains, it's about consistency of execution over outcomes, and the short term, then you can rationalize it with low risk and interact with this P3, the lizard brain, essentially, the fight or flight response, which is super powerful. Whenever we do something stupid, in a couple of hours, we're scratching our heads, or the day after going, what the hell happened, right? So let's turn down the lizard, which is turn down the risk, and then you can interact with these emotions. And the cool thing is, as I said, is all of this is predictable. If this breaks the new highs, guess what you're thinking? Super cool. Like you feel happy. It can break to new highs in different ways. So you will feel happier in different or happy in different ways. And it's in this moment you've got to check yourself. That response that you feel, you literally experience it. You're a barometer for that stuff. What am I doing? It's one trade in 1,000. Who cares? I've managed my risk. I've took a good trade. It is what it is. Move on, right? Because this drags you into stopping the trade too early, taking profits too early. This drags you into, if this comes down super fast, this is not the same as it grinding down to stop you out. And in this moment, you might cancel your stop. But guess how you felt in that scenario, in this scenario? You felt different. You felt more freaked out by that. But as you're feeling that pain, use it as your barometer for basically training your brain, not reprogramming it because it's already that way. It's just that way naturally. Anyone who says otherwise is full of shit. You've got to learn to interact with P3, and this is why no one does, because all of those hideous trading statistics we shared when you came on the call, like 80% give or take lose everything, is because of this, right? It's because of you. It's not our fault, it's your fault. But you don't know any different, you're just responding naturally. And the reason the 80% lose is because they're not moving forwards and interacting with P3. They're getting jammed up at the hard right edge in one singular event, i.e. this one, right, as an example. Well, imagine like, I don't know, imagine you go long here, right? You buy there. This is what happens. Hard right edge, you don't know what's coming. You buy, goes against you. As it's going against you, remember the grayscale, it can do it in various ways. It's aggressive, it's fast moving. You're like, oh, fuck this. Cancel your stop. I'll buy it lower. You keep going. You keep right, and then you go on your margin called your accounts history. That's not trading, but that's what is the core problem with those numbers. That's your experience of it. So you've got to turn the volume down, de-lever, don't have any leverage, and learn to interact with P3, because P3 needs to become your new friend. The lizard needs to become your friend. You need to learn how to interact with it and just say, you know what, every time you have these predictable feelings that are driven by price, every time you have this feeling at this moment, don't fall victim to it. Just rationalize it and say, you know what, it's one trade in 1,000. Who gives a shit?
Which is why you can't ever expose yourself to one big loss.
No.
Yeah. Good.
Right, we've got some more questions here, I think. By the way, that's the only way I've ever known that I've managed to create traders. I've created quite a few over the years, and that's the process by which they do it. Zion saying, could Sarid please emphasize whether a drop-based rally or a rally-based drop or a drop-based drop, etc., which one you hold in more steam, I guess?
Yeah. Good question. Really good question. What I like to do is okay, let's look at this chart here. So here we have, this is level 10 and this is level 0, and here this is level 5. Okay, let's say actually 50, there's no guarantee, so we'll say 90. Okay, so here we have 90% probability, here we have 0% probability, and here we have 50. The closer to 0 you to start trading, so starting to trade to sell here, the lower the probability. And so I'm normally looking for areas of what do you call them, like turnarounds or continuation patterns in the up part here, because sometimes you'll see something like this and say, well, that's a really nice level, and price left pretty forcefully, and a lot of people will look at this and they'll say, well, that's a really good area of supply, or that's a really good area of supply, or this is a really good area of demand. And why you can see, yeah, there was a big push. You always have to focus on what it was able to accomplish. And so sometimes you have a continuation pattern that did enormous damage to the structure of the market. A continuation pattern that was able to remove very clearly and very brutally opposing area of supply and demand. And then you take the continuation pattern. And other times you're going to have um, like a bottom or a top. And sometimes the bottom and the top doesn't do anything. And so, I wouldn't look at this. You have to look at properly formed areas of supply and demand. And here we have a top, but is that a good top? It's not a good top. And the reason it's not a good top is because pancakes were being eaten very excessively here, and so I wouldn't expect price to turn around at this level. Um, and we have another one down here. Here we had price that came down, and then it went up, and we even moved above here. But notice the price stuck around in the area for quite a long time. 1, 2, 3, 4, 5. Then price came down to it. And so you always have to focus on the structure of these areas, and most importantly, you have to focus on what they were able to accomplish after they were created. And so sometimes it's a continuation patterns, and other times it's going to be a major top or a major bottom.
Awesome, mate. Awesome. We've just got another question from Brian. He thinks he gets the parent-child relationship. Would you mind kindly doing?
I do another iteration, yeah.
Yeah, just a quick example of an.
Okay, let's just grab something else. Let's do Aussie. Do this one just for fun. Let's go to the daily chart. Okay, so notice here, this is just like the first one that pops into my mind. Notice here that price is going up and it's going down, it's going up and it's going down. But notice the big move happens as a result of price moving beyond these highs. Okay, price has to go a little bit deeper. Okay, and so you can see here that here we have an area that's it's established, independent, and so this becomes apparent. We also have micro market structure failure. Okay, price comes to it, it tests it. So we have a child,